Let's talk now to Marc Ostwald, Chief Economist and Global Strategist at ADM Investor Services International. Marc, welcome back. Good to see you. So China's economy grows 5.3 in the first quarter of this year, passing the analyst expectations. Does this mean the pain is over?
Certainly not. I think there are a number of points of concern. One, the way that the economy tailed off in March. If you looked at the monthly numbers, they were considerably weaker than expected. I think the big point of concern is the infrastructure investment is clearly supporting the economy, and that is a good thing. And the call for more investment into the high-tech sector, is doubtless justified. However, there is this yawning gap emerging in fixed asset investment between the public sector, up 7.8% year on year, and the private sector, 0.6%. So I think that's my concern would be how sustainable is that in the long run if all that public sector investment doesn't start to spill over into the private sector and encourage people to actually start investing in the private sector.
Retail sales and the industrial output figures fell rather short of forecasts. I mean, that will be a concern, won't it?
Yes, it will. I mean, the industrial production numbers one really has to break down because there are patches of enormous strength. Anything which is related to the energy transition, for instance, aluminium output, very strong. On the other hand, you've got things like cement output was down 22% year on year. You've got crude steel output down about 7%. And that's all related to the property sector, which remains the Achilles heel. It's not something which is quickly resolvable. There's no magic wand which can be, particularly in terms of restoring, I think, consumer confidence in getting involved. Other side of that coin is, on the other hand, if you look at things like passenger numbers, if you look at which were up enormously, and also catering, i.e. demand for going out, that is actually very strong. So as much as consumers may not be spending so much on their households, they're certainly going out and enjoying themselves. And particularly this similar pattern to what we saw in Europe and North America post the lifting of COVID.
What are the implications of these trends, if you just look at what we've talked through, in terms of China's economic outlook going forward over the next year or so?
I think in trend terms, I still think that China's probably more likely to surprise on the upside this year than on the downside. However, the concern would be if we keep on getting increased production, and in some sectors you're already seeing it, you're getting a very big buildup of inventories. And at some point, a big buildup of inventories mean people want to start to offload those inventories, which crush margins and puts corporate profits under some pressure. And that's really where I think there's more support is going to be needed as we go through the year to ensure that some confidence is restored both to the consumer sector and indeed to the business sector in much broader terms than the narrow focus on the high-tech and energy transition, even though they are very important parts of the economy now.
Marc, good to see you. Thanks so much for coming on the programme again. Marc Ostwald, Chief Economist and Global Strategist at ADM Investor Services.